Assalamualaikum warahmatullahi wabarakatuh and good morning. In this series of lecture, we will be looking at accounting for manufacturing businesses. Okay, so the other two types of operations that we have looked at before. Firstly, we looked at service operation. Okay, so what they do is that they provide services for their clients, and from there they will get the revenue. The second type of business that we looked at was merchandising. Okay, so how do they operate? Is that they would purchase inventory from their suppliers, and then they would sell those inventory to the customers. And from there they will gain the revenue and subsequently profit. Okay, so the third type of operation that we'll be looking today is a manufacturing type of business, where they would buy raw materials. They would convert those materials in their production process and produce finished goods, and they would sell those finished goods. So that's their kind of business. Okay, so we will look at how does that kind of business will be preparing their accounts, and what kind of information that they will produce in their financial report. Okay, so that's what we are going to do today in this series of lecture. So before we go to that, there's a concept that we have introduced very briefly in our first lecture. We have touched on managerial accounting. Okay, so we would like to see the differences between managerial accounting and financial accounting. Okay, those are the two main fields or main roles of accounting. So it says here that managerial accounting provides economic and financial information for managers and other internal users. Okay, so managerial accounting is about providing information on the finance as well as non-financial information to internal users, to people within the organization, managers, directors, the line operators, for them to conduct their daily activities, to control their subordinates, and to make decisions. Okay, and when we try to compare between managerial accounting and financial accounting, there are several aspects that we compare. Firstly, who are the main users of those the reports that are produced in both accounting? Okay, so there are two, like I said before. There's the financial accounting, there's the managerial accounting. Like I said, managerial accounting, the main users of the managerial accounting will be the internal users, such as officers and managers, for them to manage, to monitor their activities, and to make decisions. Okay. Financial accounting is primarily used among the external users. Okay, for example, stockholders, creditors, regulators. Stockholders are people that invest in the company. Okay, so they would like to know whether their investment is reaping the benefits. Are they getting returns out of their investment? The creditors are looking at whether the company is available or have the capability of paying their dues, paying their debt. And whereas the regulators probably are concerned about how much are the company making, and how much tax that the company is supposed to pay to the government. Okay, so these are external users, and they would use the financial accounting provided by the company, whereas the internal users will mostly use managerial accounting information. Okay, secondly is the types and frequency of reports. Financial accounting reports, which are called financial statements. These statements are produced on a scheduled basis. Okay, as a minimum, they would be produced once annually, okay, once in every year. Okay, at the end, after the end of the fiscal year of the company would produce the financial statements, so that these financial statements are disclosed to the interested parties, to the stockholders, to the creditors, to the regulators, to the inland revenue, which will be collecting their taxes. Okay, so at least a company is obliged to produce financial accounting statements once a year, but sometimes they produce it more frequently, probably in terms of quarterly, so that they will produce information about the performance of the organization to the external parties on a much regular basis. Okay, so they might use it quarterly, which is every 3 months. Okay, but for managerial accounting, the reports are internal reports. So there are many types of reports under internal reports, and those reports are produced as frequently as needed. So whenever management wants a specific report, they will request the relevant departments within the organization to prepare those reports on, and probably sometimes on ad hoc basis. Sometimes there's a special needs report, sometimes on a scheduled basis, but these are frequently and produced as and when needed. Okay. And thirdly, what are the purpose of the reports? So for financial accounting is a general purpose, meaning that the statements are generic in nature, where they show highly aggregated information or highly summarized information, and it covers the whole organization. It shows the vital information through of the whole company. But for managerial accounting reports, they are specific purpose. They could be very detailed, but they don't cover the whole company. It is focused on a particular department, a particular product, sometimes a particular process, a particular division. So they are very focused and very detailed. Okay, and they are used for very specific decisions. Okay, so for example, if they are evaluating whether a certain product is viable to be produced, then they will produce a report that is specifically talking about that product and not looking at other products that company produce. But for general purpose, everything is in there. Okay, but in very general form. So in the financial accounting information, for example, we are not able to see the performance of each product. If a company produces 5 products, we are not able to see the performance of all the 5 products. But we will only be able to see the sales, the revenue coming from all of the products as a total. And then fourth, the content of the reports. What is in the report? So like I said, financial accounting, they show the business as a whole. It's highly aggregated, highly condensed, summarized, and it's limited to double entry accounting and cost data. So the information is purely in financial basis. Okay, they only show financial information, okay, which is captured in the accounting process, and the content of the reports must comply with generally accepted accounting principles. They follow the standards of the particular country. Okay, and they are usually they usually must follow the principles, so that they ease the understanding among the users. So if a stockholder looks at financial reports coming from 2 or 3 different companies, stockholders will be able to compare the performance between them and be able to make decision on whether to invest or which company for them to invest in. But the content of reports for the managerial accounting pertains to subunits of the business. It's very focused information, not covering the whole business. It's very detailed, like I said, extend beyond double entry accounting to any relevant data. So it is not confined only to the records captured within the traditional double entry accounting, but it also includes other relevant data which may or may not be financial information, maybe some other aspects. Okay, and standard is relevant decision. So they are not they are not obliged to follow the generally accepted accounting principles, but they follow the standards within the organization. So the organization itself might have a standard requirement or needs by the specific departments in order for them to make decisions. So they follow their own standards. Okay, they are not obliged to follow regulations from the authorities, because it is used internally, not for use by external parties. And the fifth aspect is the verification process. So financial accounting information produced in the financial statements must be audited by CPA, chartered public accountants. Okay, they must be audited. Although the quarterly information might not be audited, but at least the annual financial statements must be audited by the CPA before they are published for public viewing. For managerial accounting information, they need not to have independent audits, but they may have dependent. We don't call it dependent audits, but we call it internal audits. The internal department may audit internal information, but they do not require independent audits, or independent audits meaning CPAs, companies outside of the business doing audit for them. Okay, but they might have their internal people to do their own audit, but that's is not a requirement for it is not an externally required by regulations. Okay, but it's their own business practice if they want. Okay, some of the management functions. Okay, what do the managements want to do? They do planning, they do directing, they do controlling. So planning is about thinking about the future, what they need to do, how do they want to achieve their objective. Okay, so whether they want to maximize short-term profit or obtain market share. So these are the decisions that they want to do. They plan to achieve these things, commit to environmental protection and social program, and they plan how to add value to the business. Once they have planned, or they know the objective of the company, then they do directing. Okay, which is coordinating the diverse activities and human resources. So they have resources. So how do they utilize all these resources in order to achieve what they have planned before? Okay, so they implement the planned objectives, provide incentives to motivate employees. Okay, so how do they motivate the employees to achieve their goal through incentive? Okay, and sometimes they do the hiring and training of employees, and they produce smooth running operation. And thirdly, they control. Okay, once they give a directive to the personnel, to the departments, to the divisions, then they do the controlling part. How do they control so that these divisions or human resource follow what they're supposed to do? So so they would keep activities on track, determine whether goals are met. So they have a performance evaluation system or goal attainment measurement, performance measurement, in order to see whether the company is going on the right track according to the direction, and are they going to achieve their objective. Okay, so they may use an informal or formal system of evaluation. So these are the normal or the generic management functions. So managerial accounting is about giving information for the purpose of management function. So Managerial accounting is information is used for planning. Managerial accounting is used for directing. Managerial accounting is used for controlling. So in detail, the managerial accounting is used for these the listed purposes, for example.